Hello, I'm Sandy McVeigh, CEO and COO of Westvault Mining. Westvault Mining is a junior mining company based in Vancouver with the Hasbrook Gold property in South Nevada. I'm going to tell you about both the Hasbrook Gold property, the project, and about the company, both of which are unique in the junior gold mining space. So let's do the screen share and we'll go through our corporate presentation. Hasbrook Gold Project, there will be forward-looking statements made. Disclaimer here. I want to talk a little bit about our chairman's statement. The chairman, Peter Palmetto, is the president of Sun Valley Gold. Sun Valley Gold's a major gold fund which bought nearly 50% of the company, Westvault Mining, between 2017 and now. It's the biggest percentage holding of any company that Sun Valley Gold holds. The chairman is intensely interested and engaged in creating value and unlocking the value out of this project. He assessed it as being ripe for that when he got into it and chose last year to become both director and chairman. His point is that he is a patient believer in the secular strength of gold, and he believes, as we do, that we are re-entering a period of rising gold prices. We are well-funded and patient. That, again, sets us apart from a lot of junior gold mining companies. We believe at the right point in the cycle, WVM, which is currently undervalued, will become fully valued at least. The project itself, Hasbrook, is a low-risk, high-return project in a safe place. We have optionality. We can hold, build, sell at any time. At this point, Westvault Mining, the in-situ gold is less expensive and more attractive and more leveraged than any gold in a vault. Hence, the expression we use to describe this project, Hasbrook is an in-situ gold vault. So let me talk a little bit about that. You've got the gold in the ground. You take the gold out of the ground through mining and processing and various things that we do in mining operations. And then that gold goes from being gold in the ground to gold in the vault. The mining and processing adds risk somewhat. This is a low-risk project. Having said that, there is risk always, and it costs money. And to maximize the value to the shareholder, the way to minimize the percentage of that haircut, if you like, of the money that you've got to spend recovering the gold is to do it at a higher gold price. So that's the investor's dilemma. The solution is mine at higher gold prices. In that case, if you do that, you retain more ore reserves as a shareholder, and the value per ounce of reserves is maximized. A simple but powerful thesis. That's the strategy, how we're executing on this. We're well funded with low annual costs. Again, quite different to many junior gold mining companies. Cash on hand is about 6 million US at the moment, with annual holding costs, G&A, overhead, etc., of about 1 million US per year. That means we're good for 6 years, don't need to raise any money for the next 6 years. No dilution. Let me talk a little bit about the Hasbrook Gold project itself. The NPV value per share is at $1,800 gold is about $5 US. We're currently trading at about $1 Canadian. So there's a big value gap there. Value of recoverable gold per share is $17 at $1,800 gold. It's a simple project. 2 hills sticking out of the valley bottom, low stripping ratio, good metallurgy, good solid geology. All oxide, all above the water table. There are no issues with going ahead and building this project. The economics are strong, 295 million US NPV at $1,800 gold. That in context of the initial capex, if you look below the NPV, about 50 million US to build. So the ratio of the initial capex to the NPV is an indicator of the robustness of a project. Many projects have a 1-to-1 ratio. This one has something like a 6-to-1. 92% IRR at $1,800 gold. These numbers are all after tax. Well-defined ore body, over 600 boreholes, 13 met test programs, high margin. All these put together, all these factors I've just indicated mean that we've got an all-in sustaining cost of just over $700 US per ounce, which leaves quite a big margin at $1,800 gold. The initial capex is low. It's a simple project to build. It's fully permitted at this point. It is construction ready with issued for construction drawings and a fully developed level 3 construction plan. This will produce 71,000 ounces of gold for 8 years for a total of 577,000 recoverable ounces. As mentioned, it's very sensitive to gold price. Due to the economic factors I've just said, $1,800 gold, we're nearly 300 million US NPV after tax. Go to 2,200, that goes to over 400 million. Go to 2,600, that goes well over 500 million. So to give comfort that there's an external entity, a credible entity, which has reviewed and voted on the quality of this project. Sprott Royalty earlier this year bought an effective 1.41 stream on the Hasbrook project. Obviously, they did extensive due diligence. That's what they did. That's what they do. That's how they operate. This cost them, they paid $6 million US with $1 million on construction. So the cash transfer price is going to be at 20% of the market value of the gold. And this 1.41 stream model is offsetting a 1.1% effective NSR royalty that we as a company held. We inherited that when we bought the project, which overall combined remaining royalty that exists plus the 1.41 stream puts the effective royalty end stream at below 4%. On the whole project. So the project is not unnecessarily burdened with this stream and existing royalties by the sale of this stream. Production schedule, first 2 years from the first pit, Three Hills mine, the remaining 6 years from the larger Hasbrook pit. Now, we've modeled this by month rather than by year, as many people do. We need that level of granularity, if you like, to do our planning. You can see on the cash flow that we spend about 50 million or so upfront for the construction of the Three Hills mine. We make quite a lot of cash at $1,275 gold, as this model shows, in the 2 years of the operation of that Three Hills mine, the initial 2-year pit. This funds completely the construction of the second pit, which costs a little bit more, about 85 million. And then it's in free cash flow for the remaining 6 years after that. This model shown here is $1,275 gold. At $1,800 gold, obviously things look a whole lot better. Location, South Nevada, the Walker Lane trend. It's in Nevada, the safest jurisdiction, as always. Mining friendly. Tonopah, the local community, want this mine to go ahead. The property itself is in 2 major pits, the Three Hill pit, 1 mile west of Tonopah, and the second major pit is the Hasbrook pit, 5 miles south of Tonopah, with a small little add-on satellite pit in the middle. So phase 1, Three Hills, 2 years, 71,000 ounces per year. You can see across a long section through this, the blue, orange, and red are gold domains. You can see that the gold goes right to the surface. The first blast will be in ore. There is no pre-strip. Overall stripping ratio here of 0.8 to 1. It's a quarry. You just go in there and you start mining, put the ore, run of mine onto a heap leach, put the solution to it, recover the gold. It's pretty straightforward. This is what it'll look like, artist's impression. The pit here, waste rock storage area over to the west, heap leach facility just to the south, and the infrastructure and process plant to the west. Is there expansion potential? Yes, there is. The whole district is historically prolific and has been overlooked recently in favor of things in the center and the north, but more recently, people are looking at the Walker Lane trend, evidenced by what's happening in Beatty recently. So strong potential in the district and consolidation potential exists. On the property, we have 4 identified targets by geophysics, shown here in the blue ellipses, that one day, I think it would, there's enough evidence there that these need to be tested by drilling. We have some pretty good indications that drilling might be successful. For example, this top hole here done in 2015, it has 3.2 grams over 67 meters. It's outside the pit. We need to, or somebody needs to definitely go and have a look at that. Phase 2, years 4 through 8 of the life of mine. We have 71,000 ounces production. There's the Hasbrook Peak. To give you scale, where my arrow is, if you can see that, that's a D10 bulldozer. So it's quite a big chunk of rock sticking up at the valley bottom. Start at the top and mine it down. So there's the pit outline. You can see the blue, yellow, and red gold domains. So it's pretty mineralized all the way through. An artist's interpretation of what it will look like. 3D view, Hasbrook Pit, waste rock storage areas. The crushing and screening plant is here, heap leach, and the process plant and infrastructure down here. Lots of territory available for this, a simple layout. Expansion potential. Historically, a prolific gold and silver producing area, the Walker Lane, as before. We've got something like 4 exploration targets identified by geophysics, which should be tested at some point. We have currently no plans immediately to do that. In pit inferred targets. So inside the pit, there's 2.6 million tons of 0.4 gram per ton material. We can't report on that economically by 43101 constraints, but it does exist, and should it prove up to exist, then that would reduce the stripping ratio from 1.1 to 1 to 0.95 to 1. And instead of putting this material on the waste pile, it will go to the heap. Now, one of the interesting things about the Hasbrook Pit is this structure which goes west-northwest, the Walker Lane trend. You can see this, the fabric here in the pit. We've got some pretty good high-grade vein-type material inside the disseminated epithermal ore body. 39 meters of nearly 5 grams per ton, 13 meters of 4 grams a ton, 5 meters of 11 grams a ton, 13 meters at 7 grams a ton, 5 meters at 10, and 41 meters at 12. There's enough evidence here to indicate below the pit, untested so far by drilling, there is the potential for root material. Moving on to the shareholding of this company, 72% institutionally held by Sun Valley Gold, Ruffer out of UK, a gold fund, Eric Sprott, 5%, and Conwave, a gold fund of 4%. We're currently trading at about 65 million Canadian market cap. Directors, Peter Palmetto is the chairman, Pierre Lebel, chairman of Imperial Metals. Kevin Falcon was former Minister of Finance for BC. There's myself who run the company, and Frank Hallam. Between us, we run the company. I'm the only full-time employee. Frank is busy being CEO of the very impressively sized Platinum Group Metals deposit in South Africa, which is being developed at the same time. In summary, low cost, high margin project in the best jurisdiction. It is highly leveraged. We're letting gold price increase value for shareholders. We have low annual holding costs. We're well funded, safe, and patient. With that, I end this presentation. Thank you for the opportunity.